Hey, this is Stu with Bitcoin Fi, and today I wanted to talk about something a little bit more open and vulnerable. I am explaining why I took out a home equity line of credit against my home and put most of it into Bitcoin. So let's get started here. There are a few things I want to go over. First of all, do your own research. This is a risky move. I'm using debt, I'm using leverage against my house. And if I do not make my payments, then I lose my house. And that's quite a big risk. And I wouldn't do it if I didn't have a lot of confidence. And that confidence comes from educating myself and it comes from a lot of study. I bought a course from you into crypto. Spencer Montgomery has been coaching me. And because of that, I feel like I have a solid understanding. When I first got into crypto, I was always checking prices and charts, and I still check fairly often more than I should. But I had fear that the market was going to drop. And now I can sleep at night because I have developed this confidence and this understanding of I don't have to worry so much, at least according to my worldview and my understanding of everything. So you must do your own research. This is not financial advice. This is for educational purposes only, but do what you will with it. And here we go. There are a few metrics out there, and this is where things with crypto are pretty interesting. There's all these different metrics, these market cycle charts. And probably my favorite one is stock to flow. So let's open this up and take a look. Um, this chart is talking about the stock, like the current amount of Bitcoin that's out, which is about 18 to 19 million Bitcoins have been mined. There's only about 2 million left. And there's about 6.25 Bitcoins being mined every 10 minutes or so. And in 2024, it will get cut in half. It'll go to 3.125 every 10 minutes. It'll become twice as scarce. The last Bitcoins will not be mined until about the year 2140. So 120 years from now. When Bitcoin first started, it was 50 coins every 10 minutes. In 2012, it dropped to 25 coins every 10 minutes. In 2016, it dropped to 12 and a half every 10 minutes. And now we're at 6.25 every 10 minutes. So it's becoming more and more scarce. And that's coded into Bitcoin. That's part of the open source code that anyone can go check and verify. And that's how it's digital scarcity. So without going into that too much, why I like this chart so much. This is how you value gold, silver, platinum, copper, just commodities, diamonds, right? This is a store of value commodity. So you have like a certain amount of gold in the world and you kind of know how much gold that is. And you kind of know how much you're going to mine in a year and how long it will take to replace the stock of gold based on the flow or how much is being mined. So with Bitcoin, we know the exact numbers of the stock to flow because it's already pre-programmed versus gold. Like you don't know how much exactly you're going to mine every single year, but you kind of have a ballpark figure. It just kind of depends. Mines run out or whatever. So what I really like about this chart is it was created by this guy. He goes by an alias, Plan B, which it stands for Bitcoin. It's just this anonymous guy on the internet. He is a former institutional investor from the Netherlands. And he made this chart and published it in January of 2019. What's really crazy. Now there's an article here. This is on the website Look into Bitcoin. So it's just crazy to me that this came out in January of 2019 and he overlaid the old price action from 2010 to 2019 and going forward. What I really like about this chart is uh, it was made in January 2019, and they took all the historical Bitcoin price data and they overlaid it with how it would be valued on a stock to flow. Okay. And it didn't even come out until about here. Let's see, January of 2019 is right here. So everything before that was already happened. And it's just kind of uncanny how closely it has tracked. Yes, it's gone way up and way down. So it's just interesting to see how accurate it has been. And that's why I really like it. Now, one thing that's kind of going to mess with your head is that over here on the left, you can see that we have an exponential scale. That's really tough for humans because we think in a linear fashion, not an exponential. So we go from a dime, a dollar, 10, 100, 1,000, 10,000, 100,000, and a million. Okay. Now, the color over here on the right is the days until the next halving. So it's about 1,400 days or 4 years that it's going to cut from 6.25. This is how much is being mined. And then it's going to go to 3.125. This is where it was 12 and a half. This is where it was 25. And this is where it was 50. So based on this, what kind of happens is there will be a halving in 2012. And then in 2013, there's this big kind of new price discovery run up and everyone gets excited and is figuring out the price. And then it kind of settles back down. And you notice here it should have been around 380 to like 450, but it actually crashed back down to around 230-ish at the low, 220 maybe, before it kind of rode that, and then it followed it back up in the next halving, and then it overshot into 2017. So we have anytime it halves, it has a big run up and it overshoots about in the green zone, the yellow green zone, 1,000 to 800 days till the next halving. Now you can see that we're kind of behind schedule here. Like in 2017, we had a little bit of yellow green underneath. And we've kind of got that same thing going on here. Now, we also had earlier kind of like a double. They're saying there's a lot of similarities between 2021 and 2013 with a potential double top, the double bull run. And so that's kind of what it looks like it's shaping up to be based on the historical run up. So with this info, right now it's saying if it was truly following this, we're around 78,000 to anywhere to up to 83, 84,000. And historically, it could crash down here to about half. Like here, it says 6,000 is what it should have been following along. And it went under and went over and it kind of bounced around it. But it actually got down about 50% lower, 50% higher, and obviously a way big run up above both times. So I'm kind of anticipating a big run up of about a square up, which if you look at the chart here, is between 100,000 and a million. So over here, if we get up to here, this is around 240-ish, 220, 240. So we'll see if this actually comes to bear out and if it does run up like this, kind of like I'm expecting. Now, what I think that's a pretty safe assumption because mainstream adoption is coming. We've got Bitcoin futures ETFs. We've got the government saying we're not going to ban it. We've kind of got this new all-time highs in the last month. And Plan B, he also called the September close and the August close. He called August at 47, closed right above 47. He called September at 43, and it's right at 43. His target for October is 63K. And what is the price of Bitcoin right now? On October 25th, it's right around there. It's at 62,744 when I'm looking at it right now. So we're right there with a week to go. His close for November is somewhere in the 90K range, and in December, his worst case close is 135K. So that kind of does overshoot us to about this level, which wouldn't be as high up as the previous runs. That would be up to like here, but it's really historically would go about a full square above, maybe 3/4 of a square above, or to a half a square above. This was a kind of a bigger one. This one was about a half a square. So anyway, we will see what happens there. But that is one thing that, with how random and unpredictable Bitcoin prices seem, when you throw it into this chart, it looks super predictable. My bigger question is, part of me would maybe sell a little bit of my Bitcoin at the top and potentially be able to buy it back down if it came 50% below this line. So like here, it was supposed to be 6,000. It was actually around 3,000. And that was 2019. So it was 2 years after the top. So if we had a top in 2021 or 2022, I'm looking at over here in 2022, late or early 2023, that maybe I could scoop up some more Bitcoin in the $40,000 range. So I don't know. I'm wondering, with the mass adoption and mainstreamification, if maybe we don't see such low lows in this blue zone, this 400 to 200 days. I'm wondering if it will stay up higher towards the true stock to flow price of around 76 to 84, somewhere in there. So that is yet to be determined, but something I'm super excited about. Okay, let's move on to the next one. There are so many. I do like this 2-year moving average multiplier. Moving averages are used for technical analysis by traders. They're used a lot in stocks. Now, this one is pretty simple. It's the 2-year moving average, so the average kind of price. And it also takes that same 2-year moving average, but it multiplies it by 5. So the moving average is the green line. The red line is the moving average multiplied by 5. And you can see here in 2013, there was that big run up. It got over the moving average, came back down below it, and we had that double top. And in 2017, we had a similar thing where it went up, and that's like when you need to sell. And then anytime it's below this green line, like I said, here we're expecting it to be around 400 on the 2-year moving average. And it's actually at like 230, 250, 240. So you can get it at a discount when it's below. And you can see that same thing here. It's about 6,000. So that's kind of similar to stock to flow in a way. And here we got it, 3,400, 300, 500. Anytime it's below this green line is a really good buying opportunity historically. And anytime it's above the red line is a really good selling opportunity to take profits. Now, here we are again in 2021, and we had this big run up to 65 in the spring, but we did not actually get above the red line. So I'm kind of anticipating that this winter, similar to stock to flow, that we will get the true top over here above 100,000, if not 200,000 or 300,000. At which point, like I say, I'm wondering if it would make sense to sell, take some profit, and then buy back if we'll get another opportunity to maybe, as this trend goes up, to buy at around 40,000. If you can sell over 200,000, buy back at 40 or 50,000. So something to look at. This is a chart that I'm going to be keeping a close eye on. All right, let's move on to this 200-week moving average. Once again, I'm just going to say this all seems like mumbo jumbo, technical, crazy. I mean, look at this equation, whatever. This is also created by Plan B, and it's the percent increases of the 200-week moving average that kind of tells you when the market's getting hot. So percent monthly increase of the 200-week moving average. So this is just the moving average, 200-week moving average. And when it goes up really fast, that's when this is signifying a top, versus when it's slowly going up, it's not really doing much. So, and again, we have an exponential scale here. We can see that double top in 2013. We got the big top in 2017. And we didn't even get to the red here in 2021. And that's why everyone's kind of expecting it. And according to stock to flow, and according to the 2-year moving average, we still haven't gotten the true top for this cycle. I mean, stock to flow is saying it should be 80,000, but they're expecting at least 135, if not 200, 300,000. There's a lot of people to kind of quote and talk about. But anyway, this is something I'm going to be watching and basically looking for another uptick here where this trend line accelerates and we get up new all-time highs. And when we get some red dots, then I'm going to be potentially looking at booking some profits and saving up, basically accumulating more at lower levels. Next up is the Puel multiple. And again, I feel like I barely understand these charts myself. I'm still learning. This was created in March 2019 by David Puel. No idea who he is, but it's the daily issuance of coins in dollars divided by the 365-day moving average of the daily issuance value. Okay, so think about that, read that. You've got this blue line, which is the price action. And then you've got this red band of this multiple and this light green band. And anytime it's in the light green band is when you buy. So we had a chance here in June. We had a chance here in COVID times, March, May of 2020. We had chances all in 2018. And when do you want to sell? Well, here's the double top in 2013. Here is the 2017 top. And nowhere even close, really, in 2021 yet. So that's why I'm going to be looking for this essentially to double from 60 to over a 135K, just like stock to flow, just like plan B says, and if not, go higher and then crash back down. So that's the Puel multiple. All of these charts kind of coincide with each other, and we're just going to go through them really quick and just see. I have something about this one too. Okay, so this is the pi cycle top indicator. This one is a bit of fancy math having to do with pi. It's the 111-day moving average and a newly treated multiple of the 350-day moving average times 2. It's the multiple of price values, not the number of days. Okay, all this explaining it. But basically, when this 111-day moving average crosses the 350-day moving average multiplied by 2, that coincides with the price of Bitcoin peaking to within 3 days. Okay, so for the past 3 cycles, we see that. It is also interesting to note that 350 divided by 111 is 3.15 and pi is 3.142. This is the closest we can get to pi. So that's where the name comes from, the pi cycle top indicator. Basically what happens is when this orange line of the 100-day moving average crosses the green line, which is the 350-day moving average multiplied by 2, this orange line crosses, you got a top. It might stay up there for a little bit and then cross back down, but by then, like, you're potentially needing to sell. Like in this case, here we have 2013, the double top, the double cross. Pretty much right when it crosses, boom, that's your top. Right when it crosses, boom, that's your top. And you had a little bit of time while it's above to sell before the orange line drops back below and stays down below the green line. We had that again in 2017. It crosses, that's your top, and then it falls back below. And if you haven't sold by then, well, you're a little bit too late. So here we are again in 2021, and we did have it cross just barely in April. And you had the chance to sell. And if not, then it dipped. So we are not quite there yet. And so that's something I'm going to be watching as a strong sell signal in conjunction with the other charts. Next up is the golden ratio multiplier. All right, let's see what this has to do with the adoption curve and the market cycle. Okay, using the 350-day moving average to identify areas of resistance and to price movements. Okay, and this ratio has to do with the Fibonacci sequence. It's a mathematical thing. It's very effective at picking out intracycle highs and also the major market cycle highs. Okay, Its market cycle's highest hit decreasing Fibonacci sequence multiples of the 350-day moving average. All right, whatever. Let's just look at it. When it goes above the pink line, that's good because that purple pink line is the upper bowl high. Right now we are on the green, and we did get above it in the spring. Here's the 2017 top, and here's the double top of 2013, which went to the gray dotted lines, 1, 2, 3. So this one actually went to the 21 level. This one only went to what it looks like the ×8 level. So we will see if we get up to that level again. Something else I'm going to be watching closely. Here we have the Bitcoin logarithmic growth curve. There's no overview. It was created by a random guy in 2019. And there we go. Whenever it's at the top of this logarithmic thing, then that means you should probably book some profits. And whenever it's at the bottom or below, it very rarely goes below, but it did in COVID times at the beginning there. And right now we're just kind of in the middle. So are we gonna look, if we follow this up, it's always so hard with this cursor crosshair to see where we're going. But if we go up here, then yeah, we're getting up to that 142. So maybe that's the top. That coincides with plan B, calling for 135 by the end of the year. But maybe we'll get up higher. So we will see on the log curve there. All right, now this, we're going to move on. This is an on-chain chart. These other ones were market cycle charts. And I don't know a ton about this, but let's just see. I've got a little picture thing. I follow this guy named Michael Nadeau. He works for Invenium. It's a blockchain company, and he writes the DeFi report. So how do we get a sense of price in relation to market fundamentals? So this is one of his favorite metrics. It's the market value, or the price of Bitcoin, multiplied by the total coins. So right now, we have all the coins multiplied by 62,000 is about $1.2 trillion. And then we relate that to the realized value, the price of each Bitcoin when it was last moved, or the last time it was sent from one wallet to another. So another way of saying it is the current price related to the average price each Bitcoin is purchased at. Bitcoin just hit a new all-time high. We can see that the market does not appear to be overheating. And when we get close to the light red band in the chart, we know the market is getting hot. So let's look at this. We're not even close. We kind of got close in the spring once again, but here's 2013 with the double top once again, and the 2017 top here. And we kind of got close in the spring, but we're not even really close right now. So if it does get up to there, then that will be interesting. I would be curious. Yeah, we'll just have to see. But again, whenever you see this down here, that's a great time to be buying in the lower bound and selling in the upper bound to potentially buy back lower. So there's that. I have a few other random little charts here, and this is one of them. So this little guy, and you might have to zoom in. I can maybe link this somehow, but here we have 2013. We had a relative strength indicator downtrend. Let's just look at this 2013 one. And then we had this consolidation of the relative strength index and then a big markup. And that was in September. Okay. So we had this dip in July, this kind of flat line, and then this relative strength index takes off and we get some new highs. That's 2013. Compare that side by side with 2017, pretty similar, dip in July, right? With some flat line in September before, again, we got some downtrend consolidation and big move up. We got that in 2017. So that's pretty compelling there. in 2021 in September when I first came by this chart. Again, let's just compare it to 2017 here. Big downtrend, more consolidation, and then a big uptrend is what we're probably going to see here. So that is another one. I don't know a lot about the relative strength index. There's also these this log Fibonacci thing that they're doing, this 1.272. So whatever that means sounds interesting to me. All right, now that we've covered all that, let's move on to this. This is a thread I came across. So Yodask, okay? Thread on several models, indicators, and on-chain analysis, part 5. So I don't know what the NVT is, but apparently broke and retested, whatever that is. I'm sorry, I wish I knew. But here's the RVT ratio. Okay, whatever, I don't even know. This is from Woobull charts, WOOBULL. So Woobull, like Willy Woo, he's a pretty good analyst on some of this stuff. Let's see, the Bitcoin mayor multiple back and bull market territory after a short bear phase. And let's compare that to 2017. We had a bull run, 2017, a bear and a bull run. Let's see. Yeah. Okay, sure. We're looking, that's the 2013 top. This is the 2017 top. And we've got this little bear before, hopefully, more bull run. Okay. Okay, minor capitulation. I don't know what that means, but this compared to the 2013 chart, whatever that means. Well, there's so many things to look at and watch. Is this a good point for the theory of cycle lengthening? It seems that the cycle of bull runs is becoming lengthier and also a little bit less extreme. Like there's 2013 in blue, 2017 in red, and the current bull run in green. So yeah, maybe we don't get quite as high, but maybe we get up to here. But like the market cycles seem to be lengthening out and smoothing out to some degree. Let's see, reserves on exchange are seeing consolidation, okay, meaning that there's not a lot of supply out there. A lot of exchanges don't have a lot of Bitcoin to even sell. So there is that with Yodask. Okay, that is why I am very bullish on crypto right now and why I put my HELOC into it. Here is kind of my strategy. I have a certain amount of Bitcoin. I want to make sure that I have a percentage of it always. There's a percentage I will not part with, and there's a percentage that I would book profits and hopefully buy back later. Now, my biggest fear, as I talked about at the beginning of this video, my biggest fear is that with the mainstreamification, with MasterCard making crypto transactions readily available, potentially with just everywhere, like AMC is taking crypto, Twitter is tipping in crypto. If everywhere starts accepting it and it becomes more mainstream, I don't know if post bull run that we're going to kind of fall to 50% lower than the stock to flow. So even though it says it should be 400 and it's 200, even though it says it should be 6,000, it's 3,000. If it says it should be 75, I don't know if we're going to see it back at 40 or 50 again. Is it going to stay at this, or is it going to look forward even further and start pricing in for the next? So I'm really hesitant to sell too much and try to buy back lower. I think that there is some room for that, but I think the assumption that crypto is going to go up with all of the inflation narrative, I think that is a very safe assumption. Now, the assumption that it's going to come back down, yes, it is going to go up and down, but I'm less certain of the assumption that it's going to come down and crash 75%, 80% like it has historically. That is the part that I have a bigger question mark on. I wouldn't have bought with my HELOC like I did if I didn't have a lot of confidence in the run up. Now, selling, that's why I don't want to sell very much, if any, because I just don't know if I sell too much, it might take me forever to get back to the percentage that I want or the amount of Bitcoin that I have. So, anyway, that's kind of where I'm at with things. And with that, I will conclude the video. Let me know if you have any questions. Hopefully, you like the video. Maybe I'll have to go into the Wooble charts and figure out some more stuff with Willy Woo and get more into some of this crazy analysis. There is so much stuff, yeah, this NBT stuff I was seeing on Twitter that I have no clue what it's talking about. So if you like this video, give it a thumbs up, share it. Feel free to check out the Facebook community and join us there as we learn together. I've got some links where you can get some free Bitcoin, and let me know what questions you have. Shoot me an email and we'll try and learn together. All right, take care. And remember that financial independence is doable.